Singapore's stock market is getting a major upgrade. For years, all eyes have been on the big 30 companies in the Straits Times Index. But have you ever wondered what lies beyond them? What about the hundreds of other ambitious companies poised for growth, the ones that form the true backbone of the economy? That's about to change. The Singapore Exchange is launching a brand new mid-cap index, a move that could fundamentally reshape how investors see the market. Stay tuned as we do a deep dive into what this new index tracks, why it's launching now, and what it means for the future of investing in Singapore. This video is for educational purposes only. It is not financial advice, and it should not be taken as a recommendation to buy or sell any security. Please conduct your own research or consult a licensed financial advisor before making investment decisions. So why is this happening now? What's the driving force? On September 12, 2025, the Monetary Authority of Singapore, or MAS, officially announced the new index. This isn't just a new product, it's a key part of a bigger national strategy called the Equity Market Development Program. The core goal is to invigorate the local stock market. For too long, there's been a feeling of stagnation among these mid-sized firms. They've received far less investor attention and capital compared to the 30 giants in the STI. This new index aims to fix that structural imbalance. It's designed to create a virtuous circle. More visibility leads to more research from analysts. More research attracts more investment, and more investment motivates these companies to enhance their governance and performance to keep that capital. SGX is set to release the full, specific details on September 22, 2025. Now, let's get into the most important question. What exactly will this index track? Officially, the constituent list of companies and the precise methodology are still under wraps until that announcement. But we can make some highly educated assumptions by looking at existing mid-cap indexes, like the FTSE ST Mid-Cap Index, which serve as an excellent proxy. Let's be very clear about what's confirmed, what's assumed, and what remains speculative. What's confirmed is that a new mid-cap index is coming. That's a fact. What's assumed is its sectoral composition. If it mirrors the existing mid-cap indexes, it will look dramatically different from the STI. The STI is heavily weighted in financial services. Think of the 3 big local banks. This new index will be a powerful diversifier. We expect a heavy focus on real estate investment trusts, or REITs, which could make up around 40% of the index. That means direct exposure to Singapore's world-class property market and a source of steady dividend income. You'll also see more industrials, companies tied directly to global trade, logistics, and manufacturing. This gives you a stake in Singapore's role as a critical hub in the global supply chain. Finally, what's purely speculative for now? Any talk of new ETFs or futures products. While SGX has a strong history of creating such products, nothing has been officially announced yet. So, why is this index such a game changer for professional and institutional investors? First and foremost, it provides a clear, official benchmark. Fund managers, pension funds, and insurance companies need a reliable yardstick to measure their investment performance. Without one, it's hard to justify investing in the mid-cap space. This index becomes that crucial yardstick. Second, and this is the part that could truly unlock capital, it paves the way for new financial products. We're talking about exchange-traded funds, or ETFs. An ETF tracking this new index would allow an investor to buy a single share on the stock exchange and instantly own a piece of all the companies in the index. This could turbocharge the entire mid-cap segment. How? By creating a simple, low-cost way for large pools of institutional money and retail investors to flow in. This enhances liquidity, which helps stabilize prices and makes the market more efficient for everyone. Let's look closer at the potential growth drivers. What sectors offer the most opportunity? Based on our proxy analysis, a few areas really stand out. First, real estate and S-REITs. Singapore has a global reputation for high-quality, well-governed REITs. This index will likely offer exposure to a mix of industrial facilities, data centers, retail malls, and office buildings, all generating rental income. Second, industrials. This sector is the engine room of the economy. Think about companies involved in logistics, advanced manufacturing, and aviation services. As global trade evolves, these companies are positioned to benefit. And let's not forget about technology. While it may be a smaller component initially, Singapore is pushing hard to be a digital economy hub. This index could capture the next generation of successful Singaporean tech firms as they grow. Of course, with higher growth potential comes higher risk. It's crucial to have a balanced view and understand the limitations. Mid-cap stocks often come with higher volatility. Historical data from the proxy FTSE ST Mid-Cap Index shows it generated higher returns than the STI over the past 5 years. But it also had bigger price swings. These companies are often more sensitive to economic shifts and may have less diversified revenue streams than giants like DBS or Singtel. Liquidity can also be a significant concern. This means there might be fewer buyers and sellers at any given moment. For investors, this can result in a wider bid-ask spread, which is a hidden transaction cost. Finally, analyst coverage is often more limited. This creates what's known as information asymmetry. It's harder for retail investors to get high-quality research, making deep, independent due diligence absolutely essential. So, what's the bottom line? How should we synthesize all of this? The new SGX Mid-Cap Index is a landmark development. It is a strategic and much-needed move to add depth and vibrancy to the Singapore market. It offers a clear chance to unlock value in a segment that has been historically undervalued and under-researched. For investors, it presents a powerful opportunity to diversify away from the bank-heavy STI and gain exposure to new growth sectors that better reflect the modern Singaporean economy. But it's vital to remember the risks, especially the higher volatility and potentially lower liquidity. This is not a get-rich-quick scheme, it's a long-term investment theme. The key will be watching how institutional capital responds once the index is live, and, crucially, whether new ETFs and other products are launched to facilitate that flow of capital. In summary, the SGX Mid-Cap Index isn't just another ticker to watch. It's a foundational piece of a larger, deliberate strategy to make Singapore's equity market more dynamic, more diverse, and more attractive to global investors. It's a story of growth, diversification, and opportunity that will begin to unfold in 2025 and for many years to come. Thanks for watching. Remember, this channel is for educational purposes only. Stay informed and see you in the next video.